Good afternoon, everyone. My name is Jen Murtazashvili. I am the director of the Center for Governance and Markets and a professor of public and international affairs here at the University of Pittsburgh. It is a real honor and delight to welcome you to the next installation of our series or this is our mini series on fintech and development, which is part of a larger series we're running this year on the future of foreign development assistance. And with all of the changes that have happened in the foreign aid landscape, we thought it was a really good opportunity to bring experts and scholars who are really working on alternative visions of foreign aid. So during this time of disruption, it's always a good time to talk about what reforms are out there and what we can learn from them. So it's really an honor to have with us one of the leaders in this space, Paul Wong, who will be our guest today. He leads strategic projects at the Stellar Development Foundations, where he helps institutions harness blockchain for real world impact. He's advanced innovations in global cash assistance for UNHCR, instant payments for Ukrainian banks, and tools for transparent, traceable payments. Before joining Stellar, he spent 17 years in central banking at the Federal Reserve Board and the Bank for International Settlements, among other experiences, which I know he's got even more experience beyond that is really relevant for this discussion. And then leading our discussion today is Max DeGregorio, who is a senior associate in FinTech at the Milken Institute in Washington, and proudly will say an alum of our program here at Pitt. So Max, it's great to see you again, and really eager to have this discussion with Paul. Paul, really thrilled that you're here with us, eager to learn so much more about the work you're doing at Stellar.
Thank you so much, Jen, for that intro. Like Jen said, this is the third installation of our series on fintech and the future of development assistance. I'm Maxwell DeGregorio. I work on fintech policy at the Milken Institute. My colleague Nicole Valentine is also in the audience for this session. So hi, Nicole. Paul is from the Stellar Foundation. Stellar sits on our advisory council at my program at the Milken Institute. And they've been doing a lot of work at the intersection of the future of aid, the future of humanitarian assistance, and fintech, which is exactly what Jen wanted to hear about for this series. So we're so glad that Paul was able to come and join us. Stellar does a lot of work sort of beyond that space. Tokenized money market funds run on Stellar, stable coins run on the Stellar network. A great deal of fintechs are building micro lending networks, payments networks, remittance processors, using Stellar as a backend. But so Paul is here to focus on however, the development aid and assistance context, which is just a small part of the grander work of Stellar. And this is a really cool conversation for me, Jen, because I remember when I was working for you back in the spring of 2022 in graduate school, we had the Kiev School of Economics on a webinar not dissimilar from this. Have a conversation about how they were using an NFT collection to get aid into the School of Economics when all the payments processing and standard sort of financial channels were down in those very early days of the war in Ukraine, where things were so sort of uncertain. And it was very cool to sort of hear sort of the scrappy team at the Kiev School of Economics talk about how they were using this technology to move money in real time across borders to get aid in. And I think so much more development has come in the space since sort of that seminal story. So it's really cool to see it all sort of come full circle for me at CGM. But
And
without
one of the really exciting parts before we hand things over to Paul is that there are people like me who are real novices in this area.
yeah.
So there's a lot of things, terms that you're using, Max, that many of us don't understand. So we really want you to
Mhm.
walk us through so much of this. And I know I know both you and Paul will do that, but really what we're trying to do here in this discussion is really get those who are really not familiar with these technologies and these strategies sort of up to speed with
Mhm.
what is it, how do these NFTs work? What were the success stories coming out of
Mhm.
Ukraine? What can we learn from that? Where are things going? And what
Mhm.
can sort of your average development practitioner or
Mhm.
person who cares about international affairs really learn from all of this? and
Uh,
engaged. Yeah.
exactly. And so I'll turn it over to Paul, and Paul, you can start to introduce yourself and sort of begin your presentation.
Awesome. And thank you so much, Jen and Max, for having me. I admire the work that you're doing, and it's a pleasure to be here to talk about blockchain and humanitarian assistance and aid in general. We are living in interesting times. According to OECD, official development assistance is projected to fall around 9 to 17% this year alone. And this follows a drop of 9% last year. I can tell you that some of the partner organizations that we work with have lost more than half of their funding compared to last year. And that is significant because we are talking about billions of dollars lost in funds. Health programs, humanitarian aid, governance, and civil society initiatives have particularly been hard hit, with sub-Saharan Africa and the least developed countries bearing really the greatest impact. Many organizations, as you are probably all aware of, are really in survival mode at the moment, and some may not make it through the end of next year. The United States is not alone in scaling back aid. France, Germany, and the UK have also cut their budgets, and others are also following suit. So we are really talking about a very challenging funding environment right now. Many organizations, companies, and programs, um, as I noted, are really fighting for survival. And I want to say that those funds are not coming back, and there is no white knight to come and save the day. Um, it's also incredibly heartbreaking to sort of see the talented, mission-driven people across USAID implementing partners, UN agencies, and NGOs lose jobs. It is even more heartbreaking to see programs that improve and save lives end. With every crisis comes an opportunity, and I'll quote Winston Churchill, who said, "Never let a good crisis go to waste." This moment really calls for creativity, new partnerships, financial models that make development more resilient and less dependent on one source of funding. It also calls for organizations to be more efficient and effective with the funds that they currently receive. All that said, we really need to think differently about the future of aid. And let's be honest, it wasn't clear to me that the current system was particularly effective. Once upon a time, I used to work in international development, supporting capital markets growth in Jordan. Um, at the time, I'm not sure if I could have claimed that I actually achieved much from my time in Amman. Last year, I had the pleasure of going back to Jordan for a a UNDP conference. And I sat at the same hotel conference room talking about the same issues that I did 2 decades ago. So nothing had really changed in the 20 years that I had left Jordan. And talking to local Jordanians, they reaffirmed my observation that despite the new skyscrapers that were in Amman and the new malls, the country was fundamentally the same as it was when I lived there. So change is clearly warranted. Today, what we're seeing is that organizations that rely on public funding are seeking two things: relevance and cash. And to achieve them, blockchain adoption, I think, is really essential. Innovation is really essential, and risk taking is really essential. So, what is blockchain? Blockchain is just a more efficient way to record information. And what is one of the most basic recording elements? A financial ledger. So today, the Stellar Network can move money and other financial assets around the world faster, cheaper, and more efficiently than the current system. Today, UNHCR can disperse cash around the world within a matter of seconds, and that's actually quite impressive using one system. To support, for example, Jamaicans impacted by Hurricane Melissa, the Stellar Ecosystem Partners can distribute cash to tens of thousands of people, again, within a matter of minutes. So why blockchain, and why is it such a revolutionary technology? And why is it really needed in this space? The first, I think, first and foremost, is really donors want transparency, traceability, and auditability of funds in real time. As some of you know, the Trump administration has suggested using the blockchain to track funds, international funds transactions. So the use of blockchain is really consistent with the administration's goal to make the US the crypto capital of the world. We're seeing that with our international partners. The World Bank, for example, recently launched the Funds Chain platform, which provides end-to-end transparency of disbursements. The Inter-American Development Bank has a similar platform called Agua. Um, the second is really about operational efficiency, right? So blockchain is highly efficient. Transactions on the Stellar blockchain cost just a fraction of a cent. Most of our tools, actually, I would say all of our tools are really open source, so it's free to use. Just to give you a sense of cost savings, Franklin Templeton, which has a tokenized money market fund on Stellar, has noted that the cost savings from using Stellar and blockchain in general are astonishing. They've been able to save around 50% compared to legacy systems. GIZ and OSAM use Stellar to facilitate payroll for healthcare workers in Syria. OSAM estimates that they are saving around 400,000 euros a year by using the blockchain. And that's really significant. That is more money that can be spent on programming activities versus banking fees. And the third real main motivation behind blockchain is really about innovation. We're working with organizations to think about different use cases for blockchain in addition to payments. So it's about raising funds on the blockchain. It's about automating certain features on the blockchain. Um, we're working with organizations to rethink their product line and services. Does it make sense to put microloans on the blockchain? The answer is yes. How can we automate certain insurance products? How can we support affordable housing? Blockchain is more than just payments. Again, blockchain is a record-keeping system, and you can put any number of records on the blockchain. So how can it save aid? I think someday soon, blockchain will be the standard operating procedure. So, as a donor, why wouldn't you want to give to an organization to see where your funds are in real time? I recently gave some digital dollars to an NGO, and looking at their account, most of my funds have not been spent yet. So I actually have a call later today to ask why my funds have not been spent yet. And that's pretty remarkable, right? And the funds, my expectation is that the funds actually be spent on actual programming activities versus admin fees. Um, we have another NGO that is expanding into other markets and betting on its cost advantage over competitors thanks to its use of blockchain for cross-border and domestic payments. That's pretty significant. So they've learned that they can actually use the blockchain to their competitive advantage, and they are moving into new markets because of it. We also have several NGOs working on smart contracts to automate their workflows. This includes, for example, pooling of consumer loans and creating anticipatory financing products. So, for example, if there's a weather event that says that a flooding is coming to Kenya, uh, the smart contract will automatically initiate a loan or disperse cash to allow people to prepare for that potential flooding event. And that's pretty significant. I will honestly say that there's not a day that really goes by that we don't have a donor organization or implementing partner contact us for help. This is both at the domestic and international level. So when we're talking about how organizations are leveraging blockchain for good for the aid community, we see it every day. And let me say that the interest in blockchain really extends beyond the aid community. We're seeing this from the traditional financial sector. Every major bank is looking at blockchain. I will also tell you that even small credit unions and community banks are also exploring blockchain. So is blockchain the future? I think the answer is yes. Can it save aid? I think the answer is yes. Um, you know, a year ago, it was incredibly hard to convince people in the aid world to adopt blockchain. People and institutions were risk adverse. one insight is that the current funding crisis has made institutions less adverse um, and more innovative. And one of the things that we do at Stellar is really to help those institutions manage their risk more effectively and manage the innovation that can arise from blockchain. But there is one thing that I still see in the aid sector that is a barrier to blockchain adoption, and that is really corporate culture. Change is really hard, and making those changes will be hard, but not making those changes will be even harder, as these organizations and these programs may not exist in the next few months. So
Thank
that,
you.
yeah,
Yeah,
go
so
ahead.
that was, I'm going to jump in for a second, Max. I know that you have a lot to add here. I was wondering if you could just say a little bit more about that just broader environment. I think that last point that you made really hit home about risk culture, attitudes towards change. A year ago, it was hard to convince people that this is important, and this funding crisis has made people less risk averse. This is a really important point, I think, that is we're seeing across many sectors right now with so many different crises. I'm wondering if you could tell us a little bit more about what that looks like. Like, what can you tell us a little bit more about how like the traditional aid work has now moved into this sector and what kind of obstacles that you face dealing with donors on this? Because a lot of times when I hear about some of the work the banking system and the block. This is like the private sector, um, the private financials technologies and bank accounts and all of this and donations. But how can you talk a little bit more about how this replaces or complements existing aid structures? And then the struggles that you sort of faced in sort of affecting this change. It's a big question.
Yeah, so you asked a lot.
Yes.
In terms of risk, one of the things that we've seen is in the past, international organizations, donor organizations did not really want to change their business, right? Everything works. If it's not broken, don't fix it. And that was kind of the attitude. Today, what we know is things are broken. So the current system does not work, and organizations are much more willing to accept certain risks that we weren't willing to before. In many ways, the risk aversion is a function of the clients that they served, right? So their clients were primarily governments. They effectively adopted government-like risk cultures. One of the things that we've seen is, well, if the government is gone, they can add a little bit more risk, and they actually need to if they're going to survive the current funding crisis. Um, we also see this in terms of the commercial banking sector as well, traditional finance, where we're seeing an increase willingness to invest in new technologies, new ways of doing things, because in some ways they're also fighting for relevance and survival. Um, when I imagine the future state of finance, banks may or may not be relevant. And when we talk about the aid world, these organizations may or may not be relevant. So we're living in very interesting times where we're seeing a lot more innovation in this space than I think we saw 2 or 3 years ago. Which goes to what does the future of finance looks like? What does the future look like? And it also speaks to the future of aid, right? My vision of the future is that anyone around the world has access to the same financial products that you and I have. I want people around the world to have access to a high yield US dollar savings account. I want people to have the same credit products that I have access to. I want folks to have access to the S&P 500 index, gold tokens, managed funds, and we are slowly but surely building out a world where we can provide that to uh, everyone around the world. So one of the things that we're doing at Stellar is leveraging the donor community aid to actually push those products out to everyone.
Great, thank you. But I'll hand things over to Max now. I know he's got a lot of questions, but I just want to let our audience know if you do have questions, just put them in the Q&A. We'll be sure to address them.
So, Paul, like something you talked about that you hinted at was was sort of, you're seeing NGOs, civil society organizations, even intergovernmental organizations look at this as a valuable like payment rail or money transmission rail as opposed to legacy systems. And so I think you've sort of done a good job of addressing sort of the context, right? The overall amount of dollars being spent on foreign aid looks like it's going to be declining, but the and then you have a donor group, you have sort of you have other sectors that are sort of stepping up, trying attempting to fill the void where they can. But what I would like to think about is what were some of the issues with sort of legacy systems for distributing aid, right? We talked about cost, but also like what's the value chain, right? What are you locked into? You have to you have the money in one place, so you have aid in one place, and you have to sort of pass it along sort of a chain to get it to the right place. So something we've talked about before in this series is the ability to sort of disintermediate payments as sort of a function of this technology beyond just cost savings. And so I think it would be interesting if you could talk about the value of that disintermediation in the aid context, just to start here.
So it's a great question. Stellar operates in some of the most harsh operating environments, whether it's Syria, Ukraine, Haiti, and other places around the world. The value of disintermediation can't be understated. I'm going to talk about Haiti, for example.
Mm-hmm.
One of the things that we can do in Haiti today is move funds from the US to Haiti within a matter of seconds, have those funds be held in a non-custodial wallet, which means that there is no intermediary holding the asset on your behalf.
Mm-hmm. Mm-hmm.
What this does is it simplifies the credit risk. So the credit exposure for someone who holds a digital cash, a digital dollar in their non-custodial wallet is just the asset issuer. And we typically work with asset issuers whose assets are fully backed by things like treasury securities, uh, because they are low risk and have high liquidity. So, for example, when you are to sell a digital dollar, you can actually get that money back quite quickly. In the case of Haiti, one of the things that we're doing by moving money via USDC, for example, a digital dollar solution, is that we can eliminate credit exposure to local banks.
Mm-hmm. Mm-hmm.
In many cases, local banks are facing financial difficulties just because of their operating environment. So we are helping organizations and people sort of strengthen their store of value, strengthen their liquidity profile, and reduce their own personal risk.
Mm-hmm. Mm-hmm.
But when we talk about, for example, moving $100 million to Haiti, do we want $100 million sitting at a Haitian bank account? Or do we want $100 million backed by treasury securities held here in the US? And I think the answer is a little bit obvious. You probably want your money sitting in US securities versus a Haitian bank account.
Mm-hmm. Mm-hmm. And I think that disintermediation point is like very important to sort of understanding the full picture of the value that the technology brings, right? Like not only is it easier to sort of send money to parts of the world that it's very difficult to get money to on a cost per transaction basis, but also just being able to have the flexibility to think about where the underlying assets are sitting, whether they're custodied in very relatively less risky U.S. treasuries, like you said, and then sort of where the tokens are sitting, as opposed to sending. In the worst case scenario, something we discussed at the round table just a couple of weeks ago, physical cash, into Port-au-Prince, and you end up in a scenario where you're losing a great deal of that cash on the way to the people that need it. Um, so that I think is a a great example of sort of the value and the utility of the technology. Um, and then maybe something else that you could sort of expand on, Paul, is sort of, and this ties into the disintermediation, is how does the technology sort of expands sort of the access of sort of organizations on the ground to these financial services, right? Like, previously, you would sort of be able to, you need to have sort of a relationship with the sort of the correct hierarchy of institutions to be able to participate in some of these global fundraising and funding networks. And sort of another part of the disintermediation story is you can get a digital dollar basically from anywhere that you have an internet connection. And so, like, what are the implications for that for civil society building and participation and access to these kinds of dollars?
So it's a great question. If I can just take a step back and
Go
kind of
ahead.
explain what we're able to do in terms of distributing cash in the world and how we're able
Yeah.
to do it. What happens today is if an organization like, for example, UNHCR wants to distribute cash to displaced persons around the world,
Hmm.
they would upload a file with a telephone number, email address, or what have you. Uh, the system would send out a SMS message to have them download a digital wallet. Once the user authenticates who they are, the money magically appears in their digital wallet. Once the beneficiary or the recipient receives the digital funds, they're able to do as they like with the digital funds. In some parts of the world, you can off ramp what we call basically convert it to mobile money, deposit in your bank account, or go to a MoneyGram location to pick up the cash. Um, what is interesting about this particular solution is that we create wallets on the fly. So you don't need to have a digital wallet at the time for example, an organization like UNHCR disperses the cash. But our digital wallet ecosystem is actually quite fascinating because once you receive the digital dollars, depending on which which wallet is selected, you can do things like invest in a high yield US dollar savings account. So you convert that digital dollar into a money market fund, for lack of a better term, right? You can buy other assets with it, like gold. Um, and what is interesting about this particular product is it's much safer for the person to hold tokenized gold than to carry the gold on themselves or to carry cash on themselves, particularly if they're moving from one region to another region. This is particularly true for refugees and migrants. Um, I often get lots of questions from folks like the IMF that we are dollarizing economies and that it's not fair that, for example, if we offered an S&P 500 index fund, that we're basically taking money away from local economies. And the argument that I often make is if you actually care about that, you would focus on the top 5% of the population. You don't focus on the 95%. So why should the top 5% have access to US high yield US dollar savings accounts? Why should the top 5% have access to the S&P 500 index? If you're talking about sheer volume, you need to go after them. We should not be targeting the other 95%. And sometimes that argument sticks. Sometimes.
And that's something that has certainly come up in my work over the past couple of months, especially now that there's a legislative framework for U.S. dollar stablecoins, and like you, Paul, I'm here in D.C. and I do run into IMF people every now and again, and I tell them I work in the space, and their question to me is, is what's going on with is there a risk of global dollarization? And I know it's certainly front of mind for our colleagues that work in monetary policy. But like you said, like I hear sort of a lot of very compelling arguments for sort of expansion to access for credible like savings instruments, right? So at the individual level, something we talked about before in this series and in some previous conversations. when we had Paul Brigner sort of join us and talk about stable coins and their sort of value in emerging and developing economies, was you have places, the prime examples, the Venezuelas and Argentinas of the world, where sure, we in the United States are some value of our dollar is depreciating over time, but even holding a non-interest bearing US dollar stablecoin preserves more value than holding savings in Argentine pesos or
That's
bolivars. So
one of the,
it is a very compelling story.
I'll just add one of the interesting things that have come up over the last few days for us here at Stellar is can we offer emerging market tokenized assets to the rest of the world? And the answer obviously is yes. And that's also something that we're pushing, right, in the development context. So if you wanted, for example, to invest in a Malaysian stock market, can
Mhm,
we actually provide it to you much cheaper and easier than the current system, right? So you
mhm,
can
mhm.
actually just buy it direct from a Vietnamese money investment firm or a Filipino investment firm. So I want to say we're thinking both ways, right?
That is
I
very
want
cool.
to sell
Yeah.
UBS, I want to sell
Uh-huh.
people emerging markets,
Uh-huh.
S&P 500 index. At the same time,
Yeah.
one of the things that we're looking at is
Yeah.
can you, as an American, buy a Nigerian stock market fund?
Mhm, mhm. As Jen knows, I would love to have some shares in the Uzbek stock market if I could. Uh,
So actually, I have a question along these lines. So, we're talking about investment and, giving people access to these financial markets. And to me, this is, the heart of what development is. And so often in the aid landscape, there's this conflation between, aid and what is development work, and then what is actually what causes development, right? And those are two very different things, right? So,
mhm,
remittances
mhm,
are the ladder out of poverty for so many families and for so many countries. But that's not when you teach an international development course, you're not going to say, go migrate. Get out. And international. So I'm wondering if you could just say a little bit more about the the implications of what you've just shared about access to these markets for the aid world. Yeah, Max, you're going to say something.
And I love this question, Jen. I think this is really compelling. This also gets right to the heart of the work, a lot of the work of the Milken Institute in the context of development. Like we're very interested in at the Institute, how are you promoting the development of free, fair, transparent, trustworthy, well-regulated capital markets around the world? And I think, as Jen said, like how much I think that's an important, just as important a development indicator. And so, yeah, please, I'd love to hear what you had to say to Jen's question.
These are tough questions, and
Yeah.
I'm really not an expert in a lot of these topics. My work, back in the day when I finished grad school, my work in Jordan was really focused on supporting the capital markets
Yeah.
of supporting capital markets development in Jordan. And what was fascinating about that is we were preaching and promoting really advanced products that they did not need.
Hmm.
Uh, and it was not very effective
Hmm.
because we were effectively trying to sell the US system on a country that, for example, didn't really have a large stock market, didn't really have the same type of mortgage financing that we do here in the US.
Hmm.
Um, tokenization, again, tokenization is just a record keeping system, right? And
Hmm.
we can record any type of record, uh, including things like titles to property. Um, So, as we think about tokenization of assets around the world, we can rethink how we finance different things, both at the local level, in terms of financing homes, providing credit to people, loans, um, all the way to how we finance companies within these jurisdictions. And that's incredibly powerful, right? One of the things I think we're doing with blockchain is the thing that we're doing with blockchain is really decentralizing finance and offering other opportunities, alternatives to the traditional way of doing things. So rather than, for example, if you're in Kenya, um, you don't need to go to a bank to get a loan, a local bank to get a loan. You don't need to go to a local microfinance organizations to get a loan, right? In a decentralized world, you can get that loan from anyone, anywhere, and that's incredibly powerful. One of the things that we are working with different organizations on is how can they leverage innovative financing to support their activities? If you, for example, if there is a healthcare program out there that supports malaria, eradication of malaria, why not go to one of these drug companies that provide malaria pills and have them sort of finance these activities in a more sustainable way versus what we do now, which is give the same amount of money to pharmaceutical companies so that they can make a fortune on the backs of, the taxpayer.
Mm.
Uh, I think there are creative solutions for innovative financing, both at the domestic, international levels, that blockchain can help solve.
Mm. Mm. Um, Jen, did you have any questions come through from
No,
the audience? No.
not yet, not
Oh.
yet. So bring us your questions.
Yeah, but so I think the conversation was about decentralization, sort of expanding access. Paul, is something that we focus on a lot of our work at the Institute. We're also we and I sort of building on Jen's point that this technology and what you've describing, especially the point of being able to build tools that enable capital to sort of flow both ways, right, back and forth. Aid not just being a one-way street, development not just being a one-way street. That's sort of something I think is so very compelling. Um, and then, like you said, you have decentralization enabled through these broad networks. Anyone can build on them. Value can be transmitted on them very easily. Partners can sort of scale up and start accessing these tools. Maybe a question I asked you earlier was you talked about sort of individual expansion of access to financial services, right? Individual recipients of aid through your partnership with the UNHCR, and the ability for them to sort of cash out into local currencies through on the ground partners like MoneyGram, or to sort of keep that money circulating in like the digital ecosystem to be able to buy dollar denominated assets. Um, Something I'm interested in is have is it are you seeing sort of other organizations, other groups sort of getting online and using these systems sort of beyond just your the individual recipients of aid, right? The disintermediate direct direct money to wallets. Like, what kind of partners are you seeing on the ground in emerging markets, or I'm sorry, developing economies that are taking advantage of this technology. Like, again, civil society, NGOs, local organizations.
So it's a great question. Let me focus on two types of organizations that we're working with it right now. One
Mhm.
is the US based and large international NGOs. One of the things that we are doing with them is teaching is not the right word, educating folks on how they can leverage the blockchain for their entire backend operations. This, for example, includes holding tokenized assets.
Mhm.
Uh, Many NGOs, for example, have programmed dollars that are very specific to a particular cause, country, local office, what have you.
Mhm.
And they hold it on someone's behalf, right? The local organization's behalf. Um, One of the things that we can do with blockchain is to give these local organizations real-time visibility into the parent, I'm going to call it the parent organization that is holding the funds on their behalf. So at any particular point in time, the South African branch of NGO X actually has insights into how much money they have in their account. In this case, it would probably be an investment account. Traditionally, in traditionally, some of the money would probably be moved to, for example, an South African bank account in local
Mhm.
rand. what we're able to do today is kind of protect that store of value in US dollars until it's ready to go. For our local partners, it depends on where we are in the world, and it's actually quite interesting. We have use cases where, for example, where there are capital controls.
Hmm.
We can have organizations benefit from the black market foreign exchange rate from avoiding traditional banking systems, right? So instead of, for example, I'm going to pick on Bolivia, which has capital controls. Instead of sending money to Bolivia through traditional means, um, where they are forced to effectively use the official exchange rate, we're able to use um, digital dollars in a way that allows organizations to get the full value of the currency. Um, Jen, you're an expert at this. In Georgia, for example, there are foreign agent laws that many countries are considering to adopt. We have some organizations who are incredibly nervous about doing things like making payroll through the official channels. Um, is blockchain a potential solution for protecting employees? Possibly, right? Depending on where we are in the world.
Hmm.
So that's kind of how we're helping local This is just examples. There
Yeah.
are three examples. There are many more depending on where the organizations are in the world and what they do.
And along those lines, we just have a question from the audience from Ahmed Shah Mubariz, who's one of our former postdocs, and he's originally from Afghanistan. So you can understand why, some of the questions when we've done a lot of work there are very pertinent to that particular context. And you have OFAC sanctions and all of those other kinds of dimensions, which we haven't even had those are the big governance questions. But how does that fit in? His question is, what infrastructure gaps do you see in uh, low income countries or aid receiving contexts that prevent them from leveraging blockchain technology?
It's an awesome question.
Yes, and thank you, Ahmad. It really is an awesome question. Today, most of the crypto products require a smartphone. We do have solutions that do not require a smartphone, but they are a little bit hard to support. The reason why is because most of the off-ramping that happens today kind of requires some sort of like web form or web-based experience. Today, for example, we can move money. We can move money on the blockchain using mobile money. So feature phones, we can use WhatsApp, but they're not as powerful for obvious reasons as smartphone digital wallet solutions. With that, we often get questions around connectivity. So if a country has low cell coverage or low internet coverage, that is also somewhat problematic.
Oh, that's great, Paul. And then I just received a text message from my colleague Nicole Valentine that she was about to ask the same question. So,
A lot of
but
this is very jurisdiction specific. So
yeah.
in some parts of the world, our off-ramping solutions are actually quite robust. In other parts of the world, we have very limited solutions, and that's just because they're in sanctioned countries.
And I think that the on-ramping, off-ramping question is very interesting in this context because, like, in the UNHCR example, you have the partnership with MoneyGram. MoneyGram has sort of physical locations where people can sort of convert to actual physical cash, local currencies. Um, and so much of realizing that the full potential of this technology relies on the full value chain, right? People being able to get if it's individual recipients of aid or NGOs, organizations on the ground, they have to do their own payrolls. They have to be able to move money within their local banking system when necessary or convert to cash when necessary. And so I think a very important part of this is understanding like blockchain could play and is playing a very important role in just transmitting money across borders, changing where risk can be pooled or settled, right? Like where are the underlying US dollar treasury assets that are backing some of these tokens? How is that making some of these transactions less risky? But also, how end to end are people able to get money from your donor country context all the way down to sort of the end of the value chain. And something I think is very impressive is, we have seen, the end-to-end value chain in a lot of the contexts that you said, Paul, they do work, right? You can get the money in one way and out the other. But yeah.
Yeah, yeah. If you have not, if folks on this call have not played around with digital dollars and digital wallets, I would encourage you to play around. I think once you see how fast you can move money around the world, the cost, the ease with which these things work, it's actually quite impressive. When I started down this path of blockchain and digital assets, it was a time when we had recovery phrases, incredibly hard to use. Everything kind of looked like a crypto trading platform. Today, the infrastructure has evolved where it's more payments like. So you kind of open up the app and it looks more like PayPal than it does Coinbase. Um, we are moving very quickly in this space where I think it will be eventually the default way of transacting. Already, we see that with advanced economies and the use of things like the Apple Wallet and the Google Wallet, or I can't remember what it's called. Um, but it basically controls our lives, right? I hear that soon enough we're going to have US passports as part of our digital wallet ecosystem. Our
So
being Apple and Google, right? Not Stellar's yet. But it tells you how far we're going and how the
mhm.
digital wallet will be the center of our lives, and how we're really going to reshape finance.
And I think I don't know, I think this like the story of digital ID is also sort of an interesting component here, Paul, because you bring it up in the United States, like we're achieving digital ID through sort of our own sort of very centralized, what we could call even now legacy big tech providers, right? And like a question I get from people all the time is like, why don't you see stablecoins used for day-to-day daily payments all the time in the United States? If you've such enormous cost savings. And it's like the legacy system here works sort of well enough, right? So sure, you lose money on credit card interchange fees at a much higher rate than you would see outside the US or in the Eurozone. But still, like the legacy working systems are working just well enough for just enough people that, the savings on transactions for stable coins, they're not quite there. But again, we have legal clarity. We might see that start to scale and change in the US. But like a lot of the value proposition being realized in the space has been in the emerging markets context, the developing countries context, where just transaction fees are enormous, counterparty risk is very real. Um, so I think that's a sort of a compelling analogy.
Yeah.
But then also, we're seeing sort of decentralized identity providers sort of scaling up and providing digital identity, sort of using decentralized ledgers as part of that equation too. There, so here in the U.S. we have some systems for technology that work. In other places, there are real sort of value and scale benefits from these decentralized networks.
I just have a political question. I'm a political scientist, so you'll have to forgive me. Um, the adoption of these technologies and there's a real threat to the formal institutions, right, of states. And you've talked about some very weakly institutionalized environments where you've worked, that and you've not just where you worked, but where we've seen these technologies have a very significant impact. How do governments view these technologies? Of course, many of them will welcome the infusion of cash and the aid. But, going back to the Georgia example, there are many reasons that to suspect that some of these states will be quite suspicious of this activity. They can't monitor it. Of course, from the aid side, we tell a very rosy story, right? We can access recipients, we can get money to people quickly. It's so lovely. It's direct payment. You can see whether your funds have been spent or not. It's just a lovely story. But many of these states are weak and fragile because of poor governance. And very often the leaders have very few incentives. They benefit enormously from keeping things quite fragile. Could you tell a little bit more about how you're able to navigate this, or where you've seen people navigate this?
It's a great question. You know, there's several buckets. I would put countries in several buckets. One is we want control. And where you want control, what you'll see is folks pursuing CBDC projects quite central bank digital currency projects
Mhm.
quite rigorously. I think Georgia is one of them, Jen, where, to your point, they like control or they want control. So a CBDC is often talked about. Are they going to move forward? I don't know, but it's kind of interesting that they kind of focus on that. In some countries, and I actually say the majority of the countries, and maybe it's a selection bias, is they want to be a leader in this space. So I think they might see the promise of the technology. And one thing that we've seen is a lot of governments encouraging their own institutions to basically tokenize. We work with one investment management company that came to us um, because their regulator said, we as a country need to be in this space. So figure it out. Uh, and I think a lot of that is being driven, to your point, by politics. The US is moving quite aggressively on digital assets, which I think is forcing the rest of the world to move at a pace that is probably a little bit uncomfortable for them. But they know that to compete in the next decade, they're going to have to tokenize. So again, you kind of see people using technologies in different ways based on their political motivations.
And that's, I mean, that's a real story of like institutional change that we see in so many. I mean, I'm in higher ed, right? And sort of the many of the things that you've described are risk aversion, and all of a sudden we're in this new era and facing, demographic cliffs, and so the adoption of new technologies or the adoptions of new ways of thinking about what it is we deliver, I'm hoping we'll see a lot of engines of reform. And I think that there's so many important lessons from what you're sharing for that reform story that we talk about creative destruction, and it's during these kinds of moments where we see this emerge. Where are the places where you really struggle to engage? I mean,
Oh,
not
that's
not
good.
not
Yeah.
Stellar specifically. I don't
Mhm,
want
mhm.
to talk
Yeah.
about disclose any, but in general, where are the points of friction? Um, yeah, that's a question. Then I have another short follow-up after that.
It's a great question. You mean like geopolitically or geographically? Okay.
Geographically, or are there certain kinds of regimes, or is it in a ministry? You'll find like the finance ministry is ready to go, but you'll hit political resistance, or is there a region that you've seen is really resistant? I imagine there's a lot of diffusion of knowledge. Neighbors learn from neighbors more than they'll learn from things far away.
No, it's a great question. Geographically, I would say that's very hard to answer. And again, selection bias, right? Because the companies, the organizations that come to us from various parts of the world come to us because their governments are a little bit open to it, or at least the regulatory environment is open to it. Um, in terms of the regulatory space, it sounds a little bit funny, but as a former central banker, the resistance I see from central banks is a little bit surprising. Surprising and not surprising. Surprising because the rest of the government is moving forward on certain things. And where I sort of see roadblocks is really in the central banking space, where central banks, including the Bank for International Settlements, will come out with slightly negative reports. Um, Whereas other parts of the government are actually quite progressive at this point. And I don't know if it has to do with politics and the independence of most central banks, or that central banks tend to be a little bit more risk adverse than other organizations.
Interesting. And then, along those lines, just one last question to wrap things up. At our university and our School of Public and International Affairs, our job is to train the next generation of leaders. And we have a very conventional international development program, and we're kind of scratching our heads right now, given the incredible changes that we've seen. Um, just have any thoughts for you about what you might suggest for future leaders and where they can get started to what kind of training are you looking for when you're hiring people in the space?
It's a great question. Um,
Mm.
Max came to us with this incredible passion for finance, which is rare in a policy school, right? When you think about people who are interested in international development, the people who are drawn to this field are the humanitarian types, and profit is bad, and finance is scary. So it's really this is a difficult. I think it's a difficult intersection where you're sitting, which I think makes it really quite remarkable that you're able to thrive given the challenges, the political challenges, the training that people have, prejudices about finance and so forth. Yeah.
I think my advice to students and also folks who have been in this business for a long time and might not currently be employed is go off on your own. The institutions that exist today are probably not going to exist in the same form. And it's kind of like don't wait for change and make the change that you want. So if you are really passionate about agricultural finance, don't look to the development banks for opportunities. Don't look to the implementing partners for opportunities. Create those opportunities yourselves by starting, by doing a startup.
Hmm.
Um, because this is, we, I think we as a society are under tremendous stress in terms of the change that we're seeing. Why wait for others? Sort of create your own path, and that path can look very different than what we have today, because it probably will be very different. So I encourage, folks to innovate, to think differently. This is kind of what the world needs. It's to think differently about how we do aid, how we think about government services, how we think about development. And I don't have the right answers. But in terms of, what people look for, I'm still a big fan. As someone who went to policy school, I'm a big fan of policy schools because they provide a framework for thinking about things. Um, and that's what all academic programs should, right? It's about providing a framework in terms of how you think about policy issues, whether they be economic, pure supply and demand. If you go to business school, it's about, profits and revenues. It's kind of the similar concept. If you go to law, you learn lots of like legalese, but at the end of the day, it's about thinking in a structured way, which is why I'm a big fan of graduate programs and universities in general, right? It's about having you think logically and finding creative ideas to those problems that we're trying to solve.
Well, thank you. I think that's encouraging for us to hear because that's what we try to do is provide frameworks. We can't predict the future, but really provide diverse perspectives on the challenges that we're seeing in the world right now, and know that our students are going to be the ones to lead us out of whatever mess we find ourselves in. So, Paul, this was really wonderful. Really learned so much from this conversation. Really grateful for your time and willingness to meet with us today. And Max, as always, just so grateful for your insights and your wisdom.
Thank you, Jen. It was always fun.
Same, and thank you for having me.
Yes, we'll see you hopefully again soon. Thank you. And thanks to all of you for coming. Bye.
Bye, guys.